Boy, that time flies when you're having fun. Back in the action here once again. It's about that time of day again here, folks. It's Thursday evening. It's July the 11th, 2019. My name is Joseph, by the way. And as always, this is your nightly newsletter. Now, don't forget, guys, I help traders find high-quality trade setups using a very simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job tonight's a little bit different. My job tonight is extremely important. My job tonight is to identify the best levels, the best setups, the best opportunities we see setting up for tomorrow. That's Friday, a summer Friday trading session. And tonight in the video, we'll talk about oil, we'll cover some S&P, we'll grab that Nasdaq, some gold, can't forget the gold, and of course, right, we'll finish up tonight on that mighty euro. I'm going to jump in here first this evening, though, on the oil chart, because the oil has three big components with two big chart patterns, and hopefully we can use both of those patterns together for a profit tomorrow. Let's jump into that oil chart here first. Looking at the black gold here right now, we know we start off here with the oil with a nice big bull run, right? So we know we have, right, a bullish bias on the chart right now. And then we've got the combination of really two big components. One is the trading range. And of course, that trading range tells me I want to buy low, I want to sell high, and I'm going to use those buy zones and sell zones overhead, right? I want to buy low, I want to sell high and go back into that trading range. At the same time, you'll also notice too, we have this trend line coming down. That trend line, I can almost guarantee a lot of folks are going to see this as a flag pattern. And flag patterns have a very distinct personality to them, and they basically tell us to look for opportunities to buy below the low, right, or buy above the high. Now, a couple of those are great, right, but one of those does not look like a very good idea here for tomorrow, does it? So tonight's video, we're going to talk about, obviously we're bullish right now. I'm going to talk about how I want to buy this market, right? I've got a couple of patterns I'm looking for to buy this market. I'll also talk about what it looks like to sell this market as well. How do you sell a bull market? Very carefully, well, actually very strategically, we'll talk about the pattern to look for to sell this market. And also, too, we'll talk about what a breakout looks like, right? What a breakout would look like and where they're trying to go for that breakout. And, of course, how we can trade a failure, right? What if the market fails and tumbles lower? At what point is it safe to trade this thing short? We're going to break all of those details into small bite-sized pieces for us, and we'll put together a great plan for tomorrow in just a few moments. Over on the S&P now tonight, S&P, as you can see here, right, has a very challenging combination of a bull bias, a trading range, right, a shock, and a V bottom. These are three big components here, right, on this chart right now. First of all, we can definitely see we are overall bullish, right? We know we're overall bullish. We can see that short term, right, that strong move. But you can also see, excuse me about that, you can also see here too that we also have that trading range. And of course, the range tells me buy low, it tells me sell high. So the range tells me I want to be a buyer, right? I can be a seller, right? But just like oil, if I want to sell off this high, I'm looking for a very specific type of entry pattern. We'll talk about that in detail here tonight as well, right? So how do I buy it, right? How do we buy this market down in the buy zone? I'm not just going to hit the buy button down there. I've got three different patterns I'm looking for to buy down in my buy zone. I've got one very distinct setup I'm looking for to sell off the battle zone. And of course, we can't forget about, right, what if the market tries to run higher? You know, do we have any levels of resistance overhead, and what would that do to kind of change my strategy, so to speak? And also, too, right, what does the reversal look like? You know, we've had a couple real strong moves down here, but as you can see, every time those moves lower, they've been bought right back up. So at what point does the market go low enough to call this safe to start selling? We'll talk about that in detail and exactly what pattern I'm looking for to qualify the reversal. So buying, selling, breakouts, and reversals. We're going to cover all of those strategies tonight on the video. Over on the Nasdaq, now Nasdaq is a tricky scenario here right now because you've got a lot going on here, right? First, we'll get a nice big bull run. That bull run takes us into a trading range. Now, that trading range, again, this is from yesterday's session, obviously, right? That range, and we're back in that range now, right? Once again, we know we have a range-bound market. We know we have the overall bullishness, right? Ranges, of course, tell me to buy low, right? Sell high. So I definitely want to be a buyer down here. That's for sure. There's no doubt about that. But wait a second, though. Look at that strength we have going on. Yeah, that strength is a really big variable, right? That strong bear move tells me I'm going to have to expect these sellers to try another time to go lower, and hopefully, right, I can buy this thing going back higher. So I'm trying to be a buyer, right, as the market goes lower. We'll talk about these specific entry patterns. I'll be looking for that setup as we go into this video tonight. We'll also talk about, again, every time this market seems to pull back, the buyers seem to be waiting there. So at what point, if we go lower, right, at what point down here can I safely start being a seller? And where would those sellers be trying to go? Where's the target on that short trade? We'll talk about those details, obviously, right, as we go here today. And then going higher, right? As we go higher here, what do I need to see here for a breakout, right? At what point can I sell this high, right? What's the right pattern to sell it? And then, of course, right, how can I trade that breakout? And then where are they trying to go, right? Where would that breakout even be trying to go? We'll talk all about those details tonight on the Nasdaq. We're going to cover a lot here tonight on this video. Over on gold, how can we forget about that yellow metal? Now, gold, very interesting. You can definitely see, we talked about this in last night's newsletter, right? We had that CPI, that inflation number today, and boy, did that get the gold and the euro moving at 8:30 this morning. If you watched last night's newsletter, you were ready for that action this morning. As you can see here, though, we had that trading range yesterday, that big move up, and that big move right back down. We have a great example here right now of a bear momentum, which obviously tells me I want to be a seller, right? With all of that bearish strength, I want to be a seller, right? All this movement going lower, I want to go up, and I want to sell up inside this sell zone. Now, that's a pretty big pullback, right? That's going to be a pretty big pullback, and there's a reason why I'm waiting for that big pullback, and that is that trading range. This range is likely going to be the big spoiler for tomorrow. So if you like the money in your account and you want to make it grow tomorrow on gold, we got to find a way to tie in the range, right, and this trend and make it work for both sides of the market tomorrow. I'm thinking about buying the low, selling the high, avoiding the middle, and we're going to break out, right? We're going to talk about breakouts. We'll talk about buying low, selling high here on the gold tonight. Lot to cover there on the gold. And then we can't forget about that euro. The euro is in a very similar scenario to gold in the sense that we had a range from yesterday. We went up, and a beautiful example of that failure pattern I'm going to talk about tonight, right? If you watched last night's newsletter, you were ready for that short off the high today. So congratulations on that if you banked a profit off that high. But now we're back inside that range here, right? Range, of course, tells me I want to buy low, I want to sell high, but I have to respect this momentum. And this momentum is going to be a big pain in the butt because I want to buy low here. But all that bearish momentum tells me I've got to look for a very specific buy pattern to buy that low. I'm also looking for a possible breakout here, right? And we'll talk about two patterns I'm looking for a breakout, right? I got a lot to cover here, as you can see here on that euro. We'll talk about how to buy that pullback because again, as we go lower, it's going to be pretty strong to the downside here, and I want to make sure I have the right pattern to get in long safely, right? So I'm not just buying just because it's at support. So we'll talk all about those details tonight on the euro. Got some ranges, as you can see, as we go into that summertime Friday session. I love summer Fridays. We'll talk more about that as we go into this video tonight. But before we jump into the charts, before we put the plan together for Friday's, right, summertime session, I want to remind you to join our mailing list. Now, don't forget, just before I send out, or just before I publish our video every evening on our YouTube channel, I send an email to my best clients on my mailing list, right? all this mailing list is for. No spam, no junk, right? I wouldn't waste my own time sending that garbage to you guys. Just the good stuff every evening when our nightly newsletter goes live. So if you want to be on that list and you want to make sure you know every time we publish something new here at Sideways Markets, join the mailing list with your name, your email address, and then hit that subscribe button, right? That subscribe button. Now, please don't forget that subscribe button. Your job is not over once you join the mailing list. You've got to go in and check your email. Check your email because I'm going to send you a welcome email. And in that welcome email, there's going to be a verification link. I need you to verify your inbox. And there'll be a list of resources for you so you and I can get the most out of working together. So please don't forget, join the mailing list. That way you never miss another great video. And when you subscribe, check your email. And remember, sometimes those emails get stuck in your spam filter. Check your spam folder if you don't see the email from us. Next up here, please, 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 I'm always asking for your feedback. It would mean the world to me if you would take a few minutes of your time to let me know what's the biggest obstacle standing between you and becoming confident and consistently profitable, right? Are you brand new and you're trying to get your software working? Or maybe you're learning, right, but you're having trouble with patterns. Or maybe you're an experienced trader and it's all about mindset and psychology. For you, right, we're all on this journey together, but we're all at different stages in our trading development. In your opinion, where you are in your trading career right now, what's the most important thing that I can teach you on this newsletter? And if I'm not teaching it, right, what would you want to see added to this video every evening? It would mean the world to me. Take a few moments of your valuable time. Give me some feedback in the comments section. I always want to make this video the very best resource it can be for you guys. What are your favorite markets? What's your favorite or least favorite part about this video? How can I make it better? And while you're down there in the comments section, give me a thumbs up on the video tonight, especially if you tune in every evening and support this video newsletter. I work very hard every evening to put this video together. And when you hit that thumbs up button, that like button on YouTube, it goes a real long way at helping me expose this video to other traders right on YouTube who can also benefit from this information. So thank you so much for your valuable time on that with the comments in the comments section below and that thumbs up button right on the YouTube channel. And don't forget, guys, right, if the comments aren't your thing, don't forget you can always pick up the phone and call me anytime you have any questions. You don't need to leave the question in the comments section. You can always pick up the telephone and call that toll-free phone number. I realize that in most websites these days, nobody is there to answer the phone, or when you do, it goes to some random call center. I'm old school, right? You call that toll-free phone number, I actually pick up the phone and answer the phone and actually talk on the phone. It's crazy, right? I realize I'm old school. I know most people don't like talking on the phone very much, but I love talking to my clients, especially when you guys have questions about best brokers, data feeds, charting software, stuff you need to know to get started as a new trader. Or maybe you want to know how to get a free pass to join our trade room or attend our free trading classes, right? Call that toll-free phone number if you have any questions, or drop those questions right in the comments section below and I'll get them answered as soon as I see them. But for now, though, we've wasted too much of our valuable time here now in the intro. Let's get into the good stuff here tonight. Tomorrow, of course, is Friday. It's July the 12th. What do we have here on the Econo Day calendar? By the way, I like to use the Econo Day calendar because it's nice and simple. I realize there are lots of fancy calendars out there that will tell you everything, right? I mean, if I wanted to, I could tell you what the Fed speakers had for breakfast 2 weeks ago, right? There's so much information available on the internet. But I'll tell you right now, most of us have probably already learned that more is not usually better, right? Less is more, right? So if you're here for the first time right now and you're wondering, where's that crazy calendar with all the news events? You don't need all those, right? It's better that you don't know what you don't need to know. It really is. When it comes to trading, ignorance really is bliss. I want to know what's important, and anything else, keep it out of my sight, right? I don't want to know about it. I don't want to know about indicators I'm not using. I don't want to know about correlations that are useless. Definitely don't want to know, right, what everyone's saying on Twitter about God knows what. That is just it's going to spoil my mindset. So that's why I like the Econo Day calendar, right? I don't want to know what the random news is, right? In some I don't care, right? All that matters is the stuff that really moves the markets. It's not that I don't care. It's that it's not going to make my job easier. And if it's not making your job easier, what I always recommend is give yourself a piece of paper, right? And put the plus and put the minus, right? And you go right down everything you're spending your time on, right? Is it helping you? Put it in the plus category. Is it hurting you? Put it in the minus category and get rid of the stuff that's wasting your time, that's distracting from your focus. Because remember, all those little distractions, worrying about way too many things that are not going to help you, it sucks the life out of you, and you don't have the time anymore or the energy, right? Or the bandwidth. You can only focus on so much, right? After a while, you get exhausted. It's like driving a car for 8 hours, right? You're not doing much physical work, but after a long drive like that, you're exhausted, right? You're constantly having to make decisions. It's called decision fatigue. So take an inventory, right? Take an inventory and get rid of all the stuff, right? All the chat rooms, all the Twitter feeds, all the random stuff that isn't helping you make better decisions, right? Be very careful with overloading. So long story short, that's why I use the simplified Econo Day calendar. I know it's not as sexy as the other ones, and I could really wow you with all this data, right? But that's not going to make you a better trader. Speaking of becoming a better trader, tomorrow, Friday, July the 12th. Get on with it, Joe, right? I'm sorry about that. I want to make sure I communicate as much as I can every evening on this video. Tomorrow, what do we got tomorrow? Well, first of all, right, we have the Summertime Friday. And a Summer Friday is an important piece of this, right, of this puzzle because, anytime I have a Friday sessions are always going to be early in, early out. Summer Fridays, the window is even smaller. Now, I always tell you guys, on a Friday morning, you've got to have a really good reason to be trading after 11 o'clock, right? So, think of that tomorrow as you're trading, and obviously we'll be trading together in our trade room at 8 o'clock Eastern time tomorrow, right? Every morning, 8 o'clock Eastern time, we get together and we trade the strategy together because the strategy is pretty simple. What's not so simple is doing it on your own. Right? Most of us have learned that the hard way. It's so much easier to be successful when you're trading with somebody who's been around the block and knows what they're doing and knows what to pay attention to and what not to worry about. So we do that together every morning, right, in our trade room. Tomorrow morning, get there early, get out of there early, make your money, grab some sunblock, right, and hit the beach, right? Have some fun, right? Enjoy your weekend because I'll tell you right now, when the weather cools down in the fall, right, after Labor Day, that's when the markets start to heat up, right? There is definitely a negative correlation between the temperature outside, right, and the amount of volume in the markets. So take your time this weekend, right? Enjoy yourself, but, and again, be ready for, right, later on in the year, right, when these things start heating up again. Then we'll have a full day on Friday that we can start trading. But tomorrow, though, get in early, get out of there early. Now, what's the news for tomorrow? More PPI, right? Well, more inflation, right? Today we had the CPI number, okay, CPI, consumer prices, okay? Now we got PPI tomorrow, the producer prices. Okay, these are all what? Inflation numbers. Anytime I think inflation, I think US dollar. Anytime I think US dollar, I think gold, right? I think currencies. I think negative correlations with other things, right? So we know tomorrow, currencies, definitely, right? Euro, pound, Aussie, yen, right? All the big currency pairs, currency futures will be in play tomorrow morning early. And then obviously, right, you get your gold, which we'll watch here closely tonight on this video tomorrow as well. I always get a bunch of questions about that Baker Hughes rig count. A lot of people ask me, what's my opinion of this rig count on Fridays? The first thing is, if you trade in Friday afternoon, that is not a good sign to begin with, right? If you're trying to trade Friday afternoon, that puts you right in the category of easy pickings. This is not personal to you. I'm not saying this personally to you. You probably don't know any better. But I'll tell you right now, if the exchanges were still open, right, they're probably parking lots now, right? Most of the exchanges now have been closed because it's all done electronically, right? But honestly, if the exchanges were open, you would have, right, you'd have those fat and happy traders sitting there on Friday afternoons just picking people off, right, because they won't leave the market on Friday afternoon. The smart money will be looking for ways, right, to pump and dump. Remember, Friday afternoons, the market's going to be illiquid, lower volume. When the volume drops, anybody with a big contract size, right, can pump things up, get you to try to buy it, and then sell it in your stops. That's what happens on Friday afternoons, right? On Friday afternoons, right, a big lot trader will come in, put a big buy order on the chart, right, put a big buy order on the market, get the market to jump up. It's so illiquid at that time that they can do that, right? And then guess what? When you start seeing that, you try to buy the pullback, what do? They take the same thing, and now they sell it right against you, right into your stops. It's an easy pump and dump. It's an easy rope-a-dope, right? It's an easy scam, if you will, right? That experienced traders, big lot traders run at the end of the day on a Friday, right? So when you talk about that Baker Hughes rig count, I'm going to tell you right now, just trading in the afternoon on Friday puts a big bullseye right on your back, right? First things first. Because anybody who knows what they're doing, right, isn't still going to be trading afternoon on Friday. Again, you probably don't know any better. The second thing is I could care less about the rig count, right? The rig count, the inventory report, I honestly could care less what that news says. Remember, news is noise. The only thing I care about is what's the chart telling me. So does the rig count come out and give me a bullish trend? Good. I want to be a buyer. Buy at support. Find key levels of support. The rig count itself, any news itself, is irrelevant. It's how the market responds to it. So in a way, you could say I could care less about the news. But most importantly, right, forget about the news. Trade the darn chart, right? Trade the darn chart. Okay, so tomorrow morning, early in, early out, be careful in the afternoon. And again, I don't mean it personally that you're a bad trader or anything, right? I had a horrible time over trading on Friday afternoons when I was a new trader too, because it's very common for new traders to try to make up for losses late in the week. And guess what? I made myself even worse, right? I distinctly remember having trading days on Friday afternoons where I'm trying to scalp my way back into the green for the week, and surprise, right, I ended up making the situation worse. So if you're in the red for the week on Friday afternoon, cut your losses, come back on Monday after a good night's sleep, and come join me in the trade room. I'm going to keep you out of those real easy mistakes to make. Let's keep going. Now that we know the plan for tomorrow, though, as far as the schedule goes, and I apologize that went on a little bit longer than I normally do, but I want to make sure I clarified some stuff. I've seen some comments come in lately about news events, right, and about the economic news calendar. I just want to make sure I cleared that up. Let's jump to some charts here now. We're talking crude, S&P, Nasdaq, gold, and euro. Looking at the crude oil first here right now, we've got a couple things going on here right now on crude. First of all, what do we know right now? We know we have a bull market, right? We know that for sure. Okay, we know that bull market tells us I want to buy a pullback, right? The odds are very high that we go back up to retest that high, if not further. Okay, what else do we know? We know we have a trading range. What does the range tell me? It tells me find the sell zone, right? Find the buy zone. Okay, you'll learn a lot more details of this in our video classes here at School of Trade, finding the range, right? There is a technique that we use, right, to find the correct range. And then once we know where the correct range is, we use that to find our buy zones and our sell zones. What does a range tell me to do? A range tells me to buy low, it tells me to sell high, and it tells me to avoid that middle. What else do we know? We know we have a flag pattern. Right, flag pattern is basically a bull move into a slow, sluggish channel, right? That channel, you can tell, is not a bear market yet because we haven't seen that strong move against the bulls yet, right? We haven't seen that 1, 2, 3 reversal yet. So we know this is still a bull market. That's what makes this a flag. What does a flag pattern tell me to do, though? It tells me to look for buy setups below the range or below the bull channel or up above it, right? It tells me look to buy below it, right? Or look to buy above it. Now, just looking at that right there, you can tell that's probably not going to be a very good idea, right? To be buying above it right there, right? Because that puts us inside that no trade zone. What else do we know here right now? We also know we have a strong move down. Okay, and this is a very specific situation. I think we talked about this last night on the video, right? This is a situation where we have a bull market. There's no doubt about the overall bullishness of the trend right now, whether you're talking technicals or fundamentals, right? There is that sense of scarcity happening right now because of the tensions in the Middle East. We haven't seen that in quite a while. So we know the market is bullish right now, right? And we know we want to buy a pullback when the market is bullish. But sometimes we get this scenario where we get this real strong counter trend move. See, this is where a lot of traders go wrong. I know I did when I was a rookie, right? When I was a new trader, I thought buy the low, right? Just buy the pullback. But here's what happens. What happens a lot of times is that market will start to pull back here. And right when you start thinking, oh, wait a second, it's going higher. Let's buy this thing right now. Once you start to buy it, yeah, it's almost like they can see you, right? It's spooky how they see that, right? It's almost like once you buy it right here, right, and your stop goes, right, your stop goes down here, right, guess what? They're going to come running for that stop, right? In other words, long story short, right, anytime I see a strong move like this, I have to expect that second leg. Right? And ultimately, if I want to be a buyer in that situation, I need to either wait for the sellers to finish off that second leg. That way I'm not that guy, right? Getting caught buying right here, getting stopped out just to see it go right back up without me. I know you know what I'm talking about. We've all been there before, right? You're like, oh, buy this thing, and then it comes right, stops you out, and then goes right back up again. It's painful to watch that happen to you, but it happens to the best of us. When you're new, you just don't learn this stuff yet. So again, you can buy it after that second leg, or you can use that, what's it called? That nested failure, right? That 1, that 2, and that go, right? Because that momentum going lower is so strong, right? If we don't get that second leg, right, you're thinking, let them try once, let them try twice, and then I'll make that move going higher, right? Make those sellers try a couple times, then I can buy going back in. So that is very much, right? That's very much what we're dealing with right now, right? That's very much what we're dealing with right now. We have that strong move down here. We have to assume they're going to try to get that second leg, right? Probably off that trend line. And so I'm going to look for a chance here now to be a buyer into that failure. It ain't going to be easy, and we'll talk about that here as we go here. So we got a lot going on, right? Bullish trend tells me I want to be a buyer overall, right? The range says I want to buy low. I want to sell high, right? The flag pattern is really what kind of is really the rub here right now, right? And that strong move down. Okay, first of all, let's talk about the most obvious pattern we're going to want here, and that is that nested failure. I've got this trend line coming down overhead. I want to buy this thing going back higher, but I don't want to buy in the range, and I don't want to buy into that trend line. So the best way to avoid buying into a trend line is to look for that nested with a trap on it. In other words, I'm looking for a 1 try for the bears. I'm looking for a 2 try for the bears, right? And then from there, right, I can buy. Now, obviously, this is not drawn to scale right now. We'll wait and see how this thing develops here right now. But I'm looking for those sellers try once. I'm looking to try twice, right? And then buying up from there. Now, this may happen a little bit lower, right? We may go lower, and then it's a 1, it's a 2, and go from there, right? So don't be afraid to apply that same pattern now, right? If it goes lower, if it rolls over, right, and goes one more leg lower, right? So that's going to be my key pattern there. It's called a nested failure, right? So the nested failure pattern. And again, that's because of that strong move down. Now, there's also a chance here we may go running up here, right? Get stuck inside that range, and we may get some distance away from that trend line. Hopefully that's the case, because if we can kind of clear that trend line here, right? If we can get up into that range now, Now I can use my standard failure pattern, right? I can look for the sellers to take it lower, let them try to sell it, and I can buy right into their failure, right? This would be a regular failure pattern at that point because we'll have the trend line as support and momentum be back to the bull side. Okay, so once again here, two setups I'm watching right now is that nested with that trap low, right? Bears try twice, trap low. And again, that could easily happen down here too, right? It may not happen right there. It may go pull back a bit further here for that. Or we go up into the range, right? Get away from that trend line a little bit more here. Then we look for the two-try failure, right? Move lower, let those bears. What will happen is the moving average will be here. The bears will try to sell off that moving average, and I'll be buying right into those stop losses from there. Now, what if it runs higher here? Right? What if it just runs, right? What if this thing just takes off to the upside and makes a run? What are some options right now for me to sell high and trade some breakouts? Well, first of all, right, as the market runs higher here, we're bullish already. So being a seller would require, what's the best way to sell when the market's got a bullish momentum to it? We just talked about it down here, right? What's the best way to buy with a strong bear move down? 1, 2, and go. So if we want to sell this, we go up, let the buyers try once, let them try twice. Here's the key, lower lows on this, right? Lower lows on this. That's the trick, right? That is the trick to that pattern, right? So we go up, the buyers try once, the buyers try twice, and you can almost kind of see what happened here, right? It goes up, the buyers try once, the buyers try twice, and they're selling it back down again. You could look at it right here too. We go up, right? The buyers try once, the buyers try twice, and they, right? So there could be micro, minor, major examples of that, right? The markets are what they call fractal, right? The markets are fractal in nature. So as we go higher here, right? Big move up, 1, 2, and again, the key here is lower lows for that nested failure going back into that range. What about a breakout pattern? There's two breakout patterns. One of them requires a very strong break higher, right? Strong break higher. Now, I don't want to buy high. So breakout patterns, if we do see it jump up, you've got to do everything you can to buy as low as possible, which means you want to wait for the sellers now, because remember, the bears, they're going to be interested now in running this thing back down to that low. So what I want to do here is let the bears try once, higher high, let them try twice, and I can buy into their stops from there. Again, higher highs here are the key. Let those bears try once, let them try twice. At this point now, the profit-taking buyers are already out. The sellers will try to sell it back in, and once we see that strong move higher, all the buyers that got out of that breakout move are going to chase after it and help you get that first target on that two-try breakout. That pattern is called a two-try breakout pattern because of two tries once we go higher. Now, a much more conservative breakout pattern is a 1, 2, 3 breakout. Now, the key to this is you've got to get up above the top of this trading range. So I want to see it go up, pull back, and go. The key to this pattern on a 1, 2, 3 breakout is the strength of that third move, right? You got the 1, the 2, and the 3. The pullback should come back to the moving average, right? Then it's all about the strength of that second leg going higher, right? 1, 2, 3 pullback, 1, 2, 3 breakout. Mark up that high, mark up that high now, bring it down to that low, right? And then we look for the buy off of that low, right? And that buy pattern, just so you know, right, that buy pattern, if you were to zoom in on that buy pattern here for a moment, what it will look like is it'll look like a seller failure setup into a bull pullback setup, right? There'll be two patterns there, usually coming off the low of that channel, right? So imagine now, right? Imagine that, right? That circle kind of blown up there, right? It will look like a two-try failure pattern, right? Kind of like this one back here, right? Where we go lower, the bears try to sell it, and buyers are waiting to buy right into that failure. That's the same type of pattern we're talking about. Boy, we've covered a lot of these patterns so far, and I would imagine if you're here for the first time right now, you might be a little bit confused about all these patterns, which is exactly why I want you to grab this special link to our free trading course. In the upper right-hand corner, especially for all the newbies out there, right, learn all the patterns, learn all the terminology, right, I'll also send you an invite to our free pass to our trade room so you can see how it all works. In the upper right hand corner though, grab that link and register for our free trading classes. You'll love the free course. It'll talk about how we trade, what we trade, why we trade, when we trade. Everything is covered, right, in tremendous detail in that free trading course. Most people would charge thousands of dollars for what I give away for free, right, in that free class. And I do that because I want you to get the best experience with me on this newsletter, right? I don't want to dumb this stuff down. You know, the internet wants you to kind of dumb everything down, but you guys are not dumb people. You guys are smart people. You just need to learn the basics of it so you can kind of pick up with me, right, in this nightly newsletter. Trading can be complicated. There's a lot to learn, and that free trading class is going to give you a great head start. So grab that link in the upper right-hand corner, right, and let's keep going. How about some S&P here right now? Over on the S&P. So the S&P is a pretty simple idea here right now. The S&P has bullishness, right? Bullishness. We can definitely see we're bullish on this chart right now. What else do we know? We know we have a trading range, right? We take the size of that range, and again, like I mentioned earlier, right, we do have a very specific technique as far as using that range correctly and calculating the highs and lows of that range correctly. You'll learn a lot about that, right, in the free trading classes, right? That trading range helps me identify the buy zone. It helps me identify, right, the sell zone. And again, with a range, right, I want to buy low and I want to sell high and avoid that middle, right? So now we know that trading range is there, right? What else do we know here? We also know we have a measured move, right? That measured move is an important piece of the puzzle because if we do go higher here, right? If we do go higher here, we've got a level of resistance really sitting right there above us, right? Right there above us, right, on that measured move. So in this situation, that breakout, right, if we do end up seeing a breakout higher here, just hold on, right? Because we got another level that's waiting overhead there, right? So that's a very, very important part, right, of this chart here. Very important clue. And then the last real kind of big piece of this, right, is that strong bull move, right? The last big piece of this is that strong bull move. That strong bull move. Now, anytime I see a strong move in one direction, I always anticipate another leg going higher. So put all of this stuff together right now. You've got a trend, right? It's a bullish trend right now overall with a trading range. That range says, don't buy here, right? Not what I'm looking for. I'm expecting this strong move to give me a second leg. So that strong move's really, really important. First of all, that strong move tells me, let's get a pullback, right? If we get a pullback. Now, again, I want to stay out of the middle, right? Stay out of that middle. Don't worry about the middle of that trading range. Sit on hands, right? It gets all nasty, right, inside those middles. So you want to see a pullback, right? Now, this pullback, let's talk about this a little bit deeper here. Get a little bit deeper on this. There we go. Right? This pullback. There's a couple different ways this market might pull back. First of all, right, a shallow pullback. Right? Shallow pullback. We pull back into the buy zone. The moving average comes over. The sellers will try to sell off of that moving average, right? Almost like this one back here, right? Think of that same pattern right there, right? The bears will try to sell off that moving average. We now know where their stops are. It's not a bear market. So sellers who try to sell that pullback are going to statistically be on the wrong side of the market. I would rather be on the statistical right side of the market, and I want to be a buyer into that failure. Now, this little sequence here, we oftentimes see a failure into a pullback setup. So you definitely want to keep your eyes open for that, right? A failure into a pullback. These are very, very common. They don't happen all the time, right? You'll notice back here in this one, this previous one, we didn't get that pullback, right? And sometimes you don't, right? But the failure pattern is almost a certainty there, right, as we go lower. So relatively shallow pullback. right? Now, what if the market really moves lower, right? What if it really moves lower? Like this one, like that one right there. Look what happens back here, right? We go a real strong move down. Anytime we see a strong move, we know that sellers are going to be trying, right, to get that next leg. And we've got to give them some respect, right? They've earned it. They get that big move down. Now, the big deal is that anytime we see this much movement in one direction, right, the buyers are not going to be comfortable with buying it, right? And sellers are going to be filled with courage, right? The sellers are going to have lots of courage here, and they'll try to sell once. They'll try to sell twice. What I'm doing here now is I'm using that nested pattern that I talked about earlier, right? I'm using that nested pattern that I mentioned earlier. So if we get a real strong move down here, I can't apply that same pattern. I'll wait for now the bears to try once, wait for them to try twice, and then I'll buy into those stops from there. So it's pretty simple, right? When momentum is really strong going lower, I want to use the appropriate pattern to respect that momentum. I do understand the long-term trend is bullish right now. But again, right, when I have that strong move against the trend, I've got to expect that second leg. And so I got to give them a couple tries there, right, to get that, right, before I start trying to be a buyer, right, going higher. Now, another pattern you want to keep an eye on would be a two-legged pullback pattern. Two-legged pullbacks are not as common as I wish. They're they're great, reliable patterns. They don't happen as often as I wish they did. But if we do see one pullback, two pullbacks, up and over now, right? That's your secret there. We call these two-legged pullback setups because there's one leg and two leg. And I'll be honest, sometimes we see 3 or 4 legs on the pullback too, but it's fine. Start the trend line over it, get that trend line down, and you want to buy that pullback right up above it. And as I always remind you guys on this, right, on this video, you really want to be able to see some daylight, right, between the candlesticks there and the trend line. Right? I have a lot more rules that we go over in our video classes. And of course, we use those rules with a checklist in our trade room. But that's kind of the basic fundamentals of it, right? Make sure you've got some space there between the trend line, right, and those candlesticks. In other words, right, you don't want to trade the grinder. Right? The grinder. That sounds lovely, doesn't it? Right? The grinder. Oh yeah, can't wait to get me in some of that, right? I don't want the grinder. I want it up, over, right, and go from there, right? So skip the grinder, right? Skip the grinder unless you're going to put some sauerkraut on top of it or something like that, right? But skip the grinder for trading. Wait for that up and over. And again, it's called a two-legged pullback setup, right, coming off of that low. So those are 3 different pullback patterns, right? 3 different pullback patterns for buying off of that low. So now we're talking, right? Now we're talking. With those 3 now, if we sit inside the range, sit on hands, right? Sit on hands. Don't trade the middle. Now, what do we do if we go higher here? Okay, now here's the key. Well, it's a very strong move. Okay, do I really want to apply that same sell here? That's going to be tricky. That's going to be tricky. If you want to sell this, you've got to look for the king, right, of these shorts, and that would be a crown reversal. It's a 1 try. It's a 2 try with a trap. This is the only way that you're going to feel comfortable, right, with that short, right, is to get, right, 1 try for the buyers, 2 try for the buyers, and really look at the details of this setup, right? It's a lower high followed by a slightly higher high, right, with lower lows in between. All right, guys, it's kind of like an expanding little triangle there, right, as it pulls back. The key here is, as we're going higher, if I want to short this puppy, I need to wait for it 1 try for the buyers, let them try a second time, and I need to focus on selling as high as I can because it'll be such a strong bull market, right? What I'd rather do is, if this thing really keeps running higher here, where's it probably going? It's probably going to that measured move, right? That measured move we talked about earlier. So if we get that run higher here, I'm thinking 2 try breakout, right? Strong move up, 1, 2, trap, and go. Now, why do I talk about a trap on this one, right? Why do I say specifically trap low? Because the trap pattern is my go-to pattern for any time I'm worried about buying into a level of resistance. Right? Remember, whenever we see a strong move like this, we know the markets are always moving for a reason, right? They're moving for a reason. They're not just going higher for no reason. We know where they're trying to go. They're trying to get that measured move. So we know where the objective is. I just don't want to buy way up here, right? I want to buy as low as I can because that's where experienced traders, right? Experienced traders, the traders who ultimately make a living, right? Taking money from inexperienced traders. It's how the markets work, right? The markets are nothing more than a very efficient means of taking money from the inexperienced people and putting it in the pockets of the more experienced people. Right? It's really all it is, right? I realized that, many centuries ago in Osaka, Japan, right, it was used for hedging purposes, right? Wealthy rice farmers trading their tickets. Great story, by the way. Steve Nissen's book, right, on Japanese candlesticks. I wouldn't recommend using any of those candlestick patterns, but it is a good job at giving the history of the markets, right? They started off right in Osaka, Japan, and boy, they have morphed into an environment where experienced people come in and they say, okay, give me a chance now to pick the pockets of those inexperienced traders. So your job is to pick up as much experience in the shortest amount of time without losing all your money first. It's as simple as that, right? I lost all my money 3 times, almost 4 times, before I finally picked up enough experience to first stop the bleeding and then start finding some consistency, right? There's a shortcut to it, right? The shortcut is work with somebody who's experienced. That is the shortcut. It's the greatest shortcut. It's the only shortcut, really, in trading is experience, right? You can't buy it. You got to work with somebody, right, who can share it with you. And that's why I'm here every night on this newsletter. Now, don't forget, guys, if we do see that 1, 2, 3 breakout, careful here now, because we're running right into that resistance. Mark up that high, mark up that high, mark up the low, right? And we'll buy that pullback. Now, that pullback, right? That pullback, depending on where that happens, right? If this thing goes like this, see, now all of a sudden that pullback's not looking as good anymore, is it? So it's very, very important that we time that entry on that setup without buying right into that measured move. All right, guys. And then what if the markets dump tomorrow, right? What if these buyers are like, you know what, we're done? Or maybe overnight we hear some news from China that spooks these buyers here. What would a bear market look like? This is not just for the S&P. This is for all the markets. What does it take for a reversal? It takes a strong move down. It takes a pullback to the moving average, and it takes a strong move off the moving average. That's what qualifies a reversal, okay? Because you can see here, if a strong move lower was all it took, well, this would be a bear market by now. But look what happens. Every time that strong move goes lower, the sellers try to hold it, and they can't. So you've got to remember that, guys and gals. When we go off that moving average, buyers are going to be waiting for those sellers to fail, right? I'll be waiting for those sellers to fail down there. I'll be looking for, though, if they're successful breaking lower, then what do? Mark up that low, mark up that low, up off that high, right? And then there's my sweet spot. We're selling off that high. And again, if you were to zoom in that area right there, there's top of that channel, it'll look like a buyer failure, right, into a bear pullback, right? It'll be a buyer failure into a bear pullback. And again, I'm just illustrating these right now. If you want to see literally hundreds of examples, right? Hundreds of examples of these setups on real charts and real patterns we see in our trade room, grab that free course, right? And remember, when you register for the free class, I'm going to send you an email with a special link to join the members section of our website. So you got to check your email, and sometimes, like I mentioned earlier, right, sometimes those emails, they get stuck in your spam filter, right? So check your spam filter if you don't see that welcome email as part of your free trading class. Okay, another confusing one here now. Now on the Nasdaq. Nasdaq is a great example here. Okay, this one's a tough one. Okay, there's a lot to cover in this one. This one's right up there with oil. There's a lot to kind of combine together here right now. What do we know, first of all? First of all, we know the bulls have big control, right? The bulls overall have control. It's not a huge surprise too, because much like the S&P, right? There's been this big rally higher, right? So anything that pulls back right now is really being seen as a buying opportunity, right? So it's been difficult for these bears. Every time they try to take it lower, every time now it just keeps getting bought right back up. Now we may see this change tomorrow. Obviously there's no crystal ball on my desk here right now. I'm just simply using the same techniques, right, that we use every day in our trade room. But the bottom line is that we may end up going lower here. But for right now, right, the buyers have control. They very obviously have control. Buyers keep buying it up, right, and the buyers have it. What else do we know? We have a very strong move against us. Now, we talked about this earlier, right? Just because we're bullish doesn't mean I can just buy it. Right? I've got to be careful here, because anytime I see a strong move in one direction, we're going to probably see that second leg. Okay. Now, you could go out and say, well, wait a second. Isn't that a nested, right? Strong move down. Wait. Isn't that a nested? Wait, can we buy that? In theory, you can, but here's one more wrinkle now. You see it? There's a range right here. Okay. Now, this is exactly why I don't erase everything every night on these charts, because ranges, for example, this is a good example, right? This range was from yesterday. Okay, we're right back in that. If we're not, that's a very strong coincidence. If we're not back in that range, it looks to me like bounce, but yeah, it looks to me like we're back inside that range. So what does a range tell me? Stay out of that middle. Right? Joe, don't fiddle with that middle, right? Mama says buy low, sell high. Don't fiddle with your middle. Okay, we don't want to trade the middle. Okay, bottom line, we want to buy low, want to sell high, right, in these trading ranges. So we got to be careful here. It's a bull market. I want to be a buyer. I want to go back up to retest that high, right? But the problem, though, is, again, with that strong move down here, I've got to expect those bears to try again. Not to mention, this is a horrible place to be trading overall anyways. Okay, now what else do we know, right? What else do we know? We also know we've got some trend lines coming down, right? We got that resistance trend line, right, coming overhead. Now, why is it important? It's important not because we don't want to buy into it, because we wouldn't buy there anyways. You know better than that, right? You know, at this point, you can't just buy above the range. You've got to wait for it now to give me some strength, right? Give me some strength. And what I think we could do on this is we could probably use this, right, as a chance to combine that 2-try breakout, right? So that's going to be the first thing I see right now is let's just, if the market makes a run for it here, right? Let's get this battle zone out of the way there. You guys know what I'm talking about there. Okay, let's get that trend line back on here, right? There's my trend line. Let's just say, for example, we make a run for it, right? Big, strong run up. Bears try once, bears try twice. That will be a beautiful, right, buy setup. Now remember, in those types of setups, it's got to be strong, right? That initial leg has to be strong, because you have to be strong enough to convince other traders that we're going to get that second leg, right? If it just kind of moseys its way higher there, right, kind of rolls, it's not going to convince enough people. It's going to be a very, very strong move to convince, right, professionals that it's worth buying relatively high, right? You're not going to make much money in this business buying high consistently. But every once in a while, there'll be times where you'll say, you know what? That's a real strong move. I can see bears have tried once. I can see they've tried twice. If I can get a trap down here, so I'm not buying right into the high, I'll bet I can at least get back up and tap those stops, right, and stop everybody out. Because professionals right here, they know there are stops up there, right? They know there are stops up there. And they know if they can hit those stops, there's probably going to be 15, 20, maybe 30 more ticks of profit waiting on the other side because of all those bears getting bounced out, right? That's your 2-try breakout pattern, right? Your 2-try breakout pattern. Now, what if it really runs, right? What if it 1, 2, 3 and takes off to the upside? Where would they be going at that point? A measured move. Okay, all of these markets right now have measured moves. We've talked about them all week this week, right? There is your next measured move going higher, right? Up around that 80-10. It's a pretty big number, right? It's a pretty big number, right? It's above the 8,000. 8,000 is a pretty big number, right? For the Nasdaq, it's a pretty big number. It's a big number for anybody, right? So if we see a 1, 2, 3 go, perfect. Mark up that high, mark up that high, bring it down to that low. You'll notice I like to go all the way back to the low of that move and grab it there. Then that gives me a sweet spot, and I'm buying, right? And again, that pattern is probably going to be a seller failure, right? A seller failure into a bullish pullback, right? And up we go, right? And again, I've got, these are very common. As part of that free trading course, you'll see a lot of those as part of the free trading course. It's very, very common. Right? Very, very common. We oftentimes see market pullback. The sellers will try to sell it. They'll fail. The buyers will pick it up and buy the pullback off it. Okay? So that's if the market goes higher here. If we go sideways, right? If we go sideways, get a comfortable chair, right? Some good music. Again, stay out of the chat rooms though. Stay out of those, right? Stay out of those places where you're going to be getting all kinds of ultimately worthless opinions. The only opinion that matters is what's right in front of you. So when you hang out in chat rooms, you're hanging on stock twits, right? In all reality, it's rookies teaching other rookies. And I don't know about you, but I don't want to learn from other rookies. And only rookies hang out in these kind of free, open, chat rooms, either rookies or sharks, right? People who want to literally pick the pockets, right, of those rookies. So trade the chart. And believe me, I know it's difficult because when you don't know what you're doing, it's natural for you to go looking for ideas. The problem is when you go into those chat rooms, you go into those forums, you go into those open, pages, whatever. Everyone's got an opinion, right? And it's like, how do you make sense of it all? You'll make your problem even worse. One of my first trading mentors a long, long time ago said, Joe, turn off the television, get out of the email, right? You're going to live or die on that chart. That chart is your only life raft. It is, right? Everything else is noise. Everything else is noise. We already see that, news events come out. We think we're like, oh, that's definitely bullish, and the market tanks, right? We saw this last week. Tons of times last week, bad news, the market jumps, right? So there's a lot of times where trade the chart. Okay, what if we go lower here, right? We go lower. As we go lower here, what's the plan now? We're very much bearish now, right? Going lower. What's the best way to buy this low? As we go lower, nested, right? You got it. 1 try, 2 try, back up in. We're applying the same, right? We're applying the same basic strategy over and over again. What's the variable though? Momentum, right? Momentum. For example, right? If we sit here for a while, right? If we sit here for a while, then that momentum kind of gets squashed, right? If we sit here for a while, then we make a run lower. Now momentum's not that great. I can be a buyer now into that seller failure, and I can buy it now going back up into that range now, okay? But if this thing just takes off to the downside here, now that momentum is still running hot. A lot of people are going to think this is a bear trend. They'll try once, they'll try twice, and then it can be a buyer into their failure. Make sense? It's all about momentum. Momentum is really the variable that tells you which variations of the patterns or which not to take at all. Now again, right, can the bears take control? Yes. 1, 2, 3, breakout. 1, 2, 3, reversal. Breakout, mark the low, mark the high, right? And we're selling, right? We're selling off the high, right? We're selling off that high. That's the key. Wait for that reversal, then sell that reversal from there. Okay, tomorrow, summertime Friday, forget about the news tomorrow morning. Trade the chart, right? Trade the chart. Stay out of that range. Buying low, right? Again, trying to sell high here, counter trend, right? Look for that, right? Look for that nested and then sell it from there. Or it's the strong move up, 1, 2, trap and go. Sorry, strong move up, higher high, right? Trap and go up from there. Or it's a 1, 2, 3 breakout with that new channel and buying off that low. And again, tomorrow morning, we'll do all of this together tomorrow, right? In our trade room together. What else do we have here right now? How about some gold? First of all, what do we know about gold? We know that gold has a very strong bear move down. That strong bear move down, it's all about momentum, kids, right? Momentum is the key here. That momentum tells me that if I want to sell it, I want to do it with buyer failures, right? Let the market go up. If I want to sell it, I want to sell at resistance. I want to sell high. Let those buyers try to buy it and sell to their failure. If I want to buy it, I got to use that nested, right? That nested pattern, right? So momentum is bearish right now. That tells me I want to sell at resistance. What else do we have here? We have a range, a little tiny, tiny range. Now, I can't be sure if this market is back inside that range or not, but this is very, very convenient, right? Once again, like the Nasdaq, right? We go up, we come back. Like I mentioned last night on the newsletter, anytime you see a range, you know it's going to be a magnet. This morning, obviously, right, we saw that 8:30 CPI report that sent this market basically collapsing back down into that range. And it looks like it took it a little bit further, right, and kind of finished off that measured move. So we know we're bearish, but honestly, it looks like we're going to be right back into that range right now. So the way that I see this is I see this being a range-bound market for the most part. I realize it's a trend right now, but I would imagine tomorrow, right, you know, we have that PPI number at 8:30 tomorrow morning, but I would imagine tomorrow, though, we're going to probably see this thing get stuck around this range here. And since that momentum is so strong to the bear side, I can look for my one try, my two try failure pattern, right? So if we end up going back into that range and chopping around a little bit right now, I'll wait for the market now to go up, wait for those buyers now to try to trade the pullback, right, and run it back higher, and I'll simply look to sell right into those stop losses, right, to sell into those stops. Does that make sense? Right? So if it does go back into that range, wait for it. Now, if it really runs, right? If it really runs higher like this, right? So again, this is where momentum is really important here for us tomorrow, right? If it goes back into the range and chops around, I can get relatively aggressive. Let the buyers sort of buy the pullback and I can sell it back down. If this thing just takes off to the upside though, the only way I can want to sell that is the nested, right? The 1, the 2, and back down from there because of that momentum. And tomorrow morning, don't forget, we'll do this together so you'll know what that looks like as it's developing, right? I'll tell you what it looks like, right, as it's developing here. And then how would it turn bullish? Simple. It's a 1, 2, 3, right? Simple as that, right? 1, 2, 3, bull market now. Mark up those highs, mark up those lows. And again, we're buying that low now. Where's my target? Target's pretty easy. Back up to retest those highs. Okay, or, right, or strong move up, real strong. 1 try for the bears, higher high. 2 try for the bears, right? Higher high there. And then we're buying into their failure from there, right? That's a much different setup, right, than this, than going up with 1, 2, and back down from there. You see the difference? Lower lows there, right? Lower lows there. If I go up and I see a higher high right away, I have a hard time selling that now, right? Because now we're seeing clearly, right, those 2 higher highs. When you set a higher high, there are buyers now piled on right here, right? Buyers are waiting right below that low because they're not going to want to buy it high, right? They're going to want to buy it if it pulls back, and that's what that trap is. That's that 2 try breakout pattern that I mentioned a couple times already here today. Right, and again, we see a lot of those patterns, right? So check that free trading course, and we'll talk more about those, right, in that free trading class. Now, what if it keeps going lower, right? What are some options here? Oh, sorry about that, right? Again, that range, if we go lower here, that range will keep trying to drag us back into that range here. I assume that range tomorrow is going to be probably the king of the Friday tomorrow. So if we do go lower here, what's the best strategy here now? We're bearish. How do we buy a bear market? Very, very carefully, right? Patiently. You patience to buy a bear market, right? We let the bears try once. We let them try twice, right? I always like to look for that trap low. It's not always necessary. Okay, when do you look for a trap? When does that 1, 2, when does it require a trap? It requires a trap if you're worried about buying high. So let's say, for example, right, we pull back. Let's say, for example, we get one of these, 1, 2, right? That's not a big deal. We got plenty of space back into that range, right? I don't need to be that worried about having enough open space overhead. But if this thing goes running back up and goes one like that, well, yeah, now I'm right back into that range now. I do have concern, and so I need a trap. See the difference there, right? It's a very small difference, but remember, traps are best when you don't have enough open space. Okay, that's where I'm looking for again, and you can see, this is why one size fits all. This is why indicators as your only source of signals just isn't going to work, right? Because it's not the indicator, it's where the indicator sets up. It's the momentum at the time. Does that make sense? Right? Hopefully it does, because I'll tell you, I lost a lot of money and I wasted a lot of time trying to just simply trade indicator setups, right? Moving average crosses, Bollinger, things like that, right? Things that things that every trading book tells you, right? Divergence signals, the king of wasted time, right? If I never see a divergence signal ever again, I'll be a very, very happy person. Yeah, they're going to work 35% of the time, but the other 65% of the time, those divergence signals are worthless unless you put them in the very right context. But if you're in the right context, you don't need divergence anymore. That's the thing. Most indicators, yeah, they're going to work in the prime setups, right? But everything works in the prime setups, right? That's the easy part. Okay, those are those 30% of your trades. Those are the easy money. Everybody was going to make money on those. Professionals are the ones that say, you know what, I'm going to find those little opportunities that not everybody knows about, right? Trapping the rookies on the wrong side, catching people chasing after markets, things like that. That's what makes you a professional, is knowing that, you know what, there are going to be a couple more setups every day that aren't going to be taught in the major trading books, and I'll be there waiting to capitalize when the rookies in the market, right, when they lose their focus. So that's one of them right there, right? Do we pull back and 1, 2 down here, right? Or do we run back up 1, 2, trap low because we're too close to that range? It's a very small difference, but boy, does it make a lot of improvement. It'll keep you out of losses, and it will save you a lot of time and money by knowing how to use the market's context, right, in the right type of pattern. All right, let's wrap up right now on the euro. We're quite deep into this video right now, but I want to make sure I give you guys as much value every night on this lesson. What do we know about the euro right now? We know the euro is overall bullish. We definitely do. We know the euro has a very strong move back down. Very important clue there. What else do we know? We have the trading range. Okay, I always encourage my clients, don't just look at here. Okay, look at the last couple days, and do you have any trading ranges? Because if you do, those ranges, they're the gift that keeps on giving, right? These ranges, when you find a range on a Tuesday, right, it'll come back on Wednesday, come back on Thursday, right? I mean, you'll see this range. It will continue to, again, kind of be the gift, right, that keeps on giving. So just because we left the range today does not mean it won't come right back in. And you can see, again, we are right back in that range right now. So what does the range tell me? Range tells me buy low, sell high, right? Got my buy zones, got my sell zones. This is all the same techniques. Again, right, in our video classes, you'll learn about the specific tricks we use to find those ranges, to find the buy zones and the sell zones. The big thing right now is we know we're bullish. I want to be a buyer, but all that bearishness combined with the middle of that range, it's a lot, right? It's a lot to overcome, right, for those bulls. So again, if we sit sideways here, we do nothing, right? Sit sideways, do nothing. If we run lower, that now is a very bearish move now. Now we're very, very bearish. If we run lower, it's a nested 1, 2, and in, right? If we chop around sideways, that absorbs that momentum now, and now we go lower, moving average comes over, yeah, just your regular failure pattern, right? Your regular failure pattern now, and then back up in, right? And you'll see lots of examples of those in that free trading course. Now, what if the market goes higher here? How do we do this as we go higher? It ain't going to be easy, folks. It's not going to be easy, right? If we're going higher here, we have a lot of concerns here. Get the measured move, got the high of day up here. This is one of those areas where you almost have to get a very strong move up, right? Get that strong move up. If you can get that strong move up, then the 1, the 2, the trap, right, and right up to those highs. Again, this is where you're gonna have to see a very strong move right now, right, to kind of clear out the concerns for those buyers. Give the buyers room to think about it. 1, 2, trap. I'd love to use this trend line coming down. I mean, that would just be kind of a dream come true. I'm not sure if we'll get that. It's a 2-try breakout, right? Trap low off that trend line. Or you could really make our job easy by going 1, 2, 3 breakout. Remember, the burden on that one is that second leg higher, right? It's not so important. The first leg is so powerful. We mark up that high, down to that low, and then now we know where our sweet spot is, right? Sweet spot, failure into pullback, right? And then up we go from there. Now from there, where's the next target on this? The next target on that would probably be that big round number, 14,000. Oh, there's that range again. The gift that keeps on giving. Okay, so I would say it should be relatively easy if we can get that breakout, right? Again, we'll probably go back to a range here, that 13,700, 13,800. Okay, just what you don't want to do though is chase after it, right? So make sure you're getting in, right, at those lows and then up into that range from there. You don't want to be chasing after it if for some reason it just shoots up, right? If it shoots up, you want to think trading range up here, right? Back into the same range there, and then it's a 1, it's a 2, and you're buying that pullback, right? It's buying those lows off that range. Obviously, we'll know more about that as time, right, progresses here tomorrow. Boy, what a great lesson. One last thing here on the euro, right? How do we turn bearish? Pretty easy, right? 1, 2, 3 breakout. Right now, it's all about breaking free of that range. Find that low, find that high. Where's my target? Yep, target's back down to retest that low. All right, guys. Did I cover everything? I think I covered everything and a little bit more here tonight on this video. I thank you so much for sticking around with me tonight, guys. If you have more questions, right? Maybe I forgot to mention something, right? Maybe you hate all my corny trading jokes here in this video tonight. If you have any more questions, drop me a comment in the comment section below. Pick up the phone, give us a call here if you have any questions. And don't forget, tomorrow morning, like I said, as you can see, the patterns are pretty easy. The strategy is pretty easy. What's not so easy is actually applying this to a real chart, right? When it's actually happening. That's why I said earlier, the only real shortcut in trading is experience. So tomorrow morning, I share all of my experience. I've been running our trade room since 2008. 11 years every morning in our trade room. I love every minute of it. Hope I'll see you there with me tomorrow morning. But almost 15 years now, I've been watching these charts, and every morning I share that experience, guiding my clients, making it easier for them to become confident and more consistently profitable in our trade room. To get started, join as an advanced member. Our advanced membership comes with our advanced classes, our beginner, intermediate, all the video classes. They're unlimited. You can take them as many times as you want. And of course, everybody loves the unlimited access to our trade room. Our trade room opens up every morning, 8 o'clock Eastern time, and only our advanced members get access. If you're not ready yet to be a member, that's perfectly fine by me. Join our free trial, right? Everybody loves that free trial because you get a free pass to our trade room, a free trading class, right? Multiple classes, right? 7 classes actually, and hundreds of examples of real setups we see every day in these markets, right? You'd be a fool not to grab that free pass, grab that free trial, learn the free trading strategy, learn the 3-step strategy. And if you're ready, come join me tomorrow morning in the trade room as a member of the trade room. If you have any questions, call that toll-free phone number, right? Use that live support tool on the right-hand side. And have a great, great summertime Friday. Early in, early out tomorrow. Be well out there. Be nice to each other tomorrow, will ya? And be here next time, guys and gals. Adios, amigos. Bye-bye for now.